Welcome back onto a corporate conversation. Then Interarch Building Solutions recently announced Capex for its new facility in Gujarat. We are now being joined by Manish Garg, who is the CEO of the company, and we'll be basing our conversation on three key points. The first one being their Capex targets, the capacity expansion, their plans for growth in FY28, and the scope, whether there is scope to increase the growth guidance of 17.5%. Mr. Garg, good morning. Thank you so much for joining in. We'll start off with the Capex plans, right? You've announced a new Capex for your facility in Kheda in Gujarat. When does that capacity come on stream? And once it does, how do you expect a boost to your balance sheet because of that?
Yeah, good morning and thank you for having me on the show. We broke ground yesterday on our Kheda unit in Gujarat. It takes us about 9 months to get it to the trial production. So somewhere in the month of June, we will start trial production, June 26. So I would say that approximately, and we will have the full production coming in by end of December. So therefore, part of it will contribute to our FY26-27 revenues, but very clearly the next year, which is FY28, it will kick in fully. We would be adding about 40,000 metric ton in totality. So part of it will come in next year, and whole of it will be next to next year in the capacity.
Okay, and your current capacity would be about 1.6 lakh?
So our current capacity now, after the commissioning of our what we call the fully integrated unit of Andhra Pradesh and the expansion in Kicha, stands at 200,000 metric tons.
Okay. So the incremental capacity addition is about 25%, is what we're trying to understand. Is that correct? From 160,000, you go to 200,000 approximately.
So we have already gone to 200 with the addition of Andhra and Kicha, which are now fully operational. With addition of Kheda in Gujarat, we go up by another 40,000 in next 1 year. We in fact broke ground for another one, so these two are parallel. In Andhra on a new land of 20 acres, where we broke ground on 27th of September, that will add another 25,000 tons to our capacity. So I would say in next 12 months, we have these two major capex. There we are spending about 80 to 100 crores, including the land. And here we are spending 70 crores excluding land.
So the visibility is for 265,000 units in terms of capacity?
That is correct.
And what does that visibility lead you to on the top line front, Mr. Garg? Because since you are on a strong capacity expansion spree, it is fair to assume that the demand right now on the ground remains fairly robust.
Yeah, so the demand is very robust, and our order book stands pretty strong, as strong as quarter on quarter it used to be. And there are new avenues also in the new age sectors like data centers and semicon and EV batteries. So we see very, very strong traction in the demand, and that's why the capacity expansion.
Okay. What is your guidance for top line in FY26, FY27? And once this incremental capacity comes on stream, what is the overall revenue that you're looking at?
Yeah. So as of now, for the FY26, and with half year, already gone, and first quarter, you saw how we grew over the last year. Our guidance would still remain 17.5% for FY26. We will of course try and do better, but our guidance would remain what it is. And for FY28, we had already told that we would be doubling our turnover at the time of going for IPO, so that remains at 2,400.
What about margins, Mr. Garg?
Margins will, we are trying to improve, and with this traction, margins should be in the similar range, but yes, they can always be better.
With the kind of capex that you are doing, do you see any impact on the margins, at least in the immediate term, and then they improve in the future?
I would say capex wouldn't really affect our margin, because capex doesn't go into the operational cost at all. So with this capex, but I don't think with this Capex spending, there is any impact on the margin. But going forward, when the capacity expansion happens and the new age sectors have stopped adopting, quite obviously there is always a possibility of moving up the margins a little bit.
You said the order inflow has been very strong.
Yes.
What is it in Q2? Are you in discussions with with more clients for further orders? I mean, what's the pipeline looking like, and what would you target in terms of exports?
Yeah. So our exports, I would say we are right now building the market for exports. So the numbers are not really very great in terms of the actual sales, but we are building market for exports. As it is, a lot of our business is domestic, but yes, we are building exports. The numbers will start to come in a bit later. In terms of domestic, it's very strong. In fact, at the end of last quarter, we had announced the order book of approximately about 1,700 crores, and it remains pretty strong even now. And we are in discussions with a lot of large orders in various sectors, including manufacturing, institutional, as well as infrastructure.
Pleasure having you, as always, Mr. Garg. Thank you so much for sparing time and joining us. Wish you good luck for the rest of the year as well. Let's take a short break. Get back to markets on the other side with Ajit Mishra of Renegade Broking.